Hi everyone, today let's go over the FOMC and Jerome Powell's comments. Then we'll get into all of the usual data and the charts. Then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jerome Powell came out and said exactly what I thought he was going to say. He said, it's not likely we're going to get a cut in March. I said that was very optimistic, and we looked at the Fed futures. It was about 50-50 going into the day, and I think that that was way too optimistic, and sure enough, it was. Came out, said it's not likely. Interestingly, though, he did mention the data is still good. They just want to see more of the good data. But he continues to mention that the economy is strong, the jobs market is strong, and based on all of that information, it does not sound like they are really getting ready to cut anytime soon. I think even the May cut is probably a little bit aggressive. We've talked about it on this channel for a while at this point, and he did come out and confirm it. Everything here says rates are going to stay unchanged. We need more data, and markets were too optimistic. Moving over to fear and greed index, we dropped all the way down to a 65 from 74. You can see this is really starting to taper off here. We did dip all the way to 57 here previously, but I think we're going to overshoot that pretty significantly, kind of get into this mid-range, back at least to neutral, if not back into fear, going back to October. In terms of price action, I don't necessarily think we'll give back all of the gains, but this does not exactly depict price action, so we could absolutely get back into fear and then see prices still remain a little bit high, and you can see that sell-off starting here, still extreme greed, so still expecting that to go lower. Stock price strength and breadth continue to remain in greed, and then put call ratio, extreme greed. I would expect that to spike up tomorrow. And then looking at volatility, we are seeing spikes in volatility. They're saying extreme fear here. I think that's a little premature. I would expect this to get at least up into the 20 range. In the short term, we've been watching it on the charts. 16.5 seems reasonable. I think we're going to eclipse these previous peaks here. And then safe haven demand, still extreme greed. Junk bond demand, however, did dip back into neutral. So markets definitely fluctuating, headed back toward those more normalized conditions from the extreme greed that we had been seeing over the last month. Moving over to seasonality, the last trading day of the month was supposed to be bullish. We did not get that. So it seems like we're going to get a couple of days of selling here at least, whether that's the tail end of the fall we were supposed to see at the end of January, or if this is early dip that we're supposed to see over the first 5 trading days of this month. I think that remains to be seen. February, typically pretty bullish here for the NASDAQ and the Russell, but I don't think markets are really setting up for that right now. So we'll see how this plays out. And I also want to highlight the fact that the bearishness for February is supposed to come around the 4th trading week of the month, right after that options expiration, but it seems like it's coming a little bit early, so I don't know if these bullish factors are going to play into it. Again, certainly possible. Statistically, it is a little bit bullish the week prior to expiration week, also quite bullish, and then bearishness after that. Seems like it's coming in early. Moving over to earnings, lots of green across the board. Boeing even had less than expected miss, negative earnings, so Boeing swinging back towards potentially profit over the near term. Still going to take a while. I think they have a couple more quarters until they start to see profit again, but they're hanging in there. Otherwise, the heavy hitters, green across the board. Didn't really see any major surprises today. And then don't forget, tomorrow we still have heavy hitters, Apple, Amazon, Meta, all after hours tomorrow. Based on what we've seen so far, I just can't imagine they're going to be able to justify their prices. I did see some stuff on the Vision Pro selling around 200 to 250,000 units just in pre-sale, so that's pretty aggressive. That's better than I would have expected. It's not something that I'm even remotely interested in, so you have those Apple lovers out there buying up those super expensive products at $3,500 each, so maybe that starts to swing in their favor a little bit, but I just don't see the strength in these mega cap names after the massive run that we've already had. And then looking at Friday, we do have ExxonMobil, AbbVie, Chevron, so those oil players reporting in the pre-market on Friday. Moving over to the economic calendar, you can see ADP non-farms actually came in a little bit worse than expected, which was interesting because, like I mentioned, Jerome Powell said that the jobs market continues to remain strong. And yesterday we did see a really strong JOLTS number, so a little bit of mixed signals there. We'll see how that comes out on the Friday session. And then you can see FOMC decision was the same. Might do a separate video on the statement just to talk through some of the changes. We'll see if I decide to do that, if it's worthwhile. But otherwise, going into the Thursday session, we still have lots of data. CPI for the Eurozone zone, fairly interesting. And then we have some economic indicators here with global US manufacturing, ISM, manufacturing PMI, and manufacturing prices coming out at 9:45 and 10 o'clock respectively. And then the Fed balance sheet, that was flat last week. I thought that was a little bit interesting. That'll be something to watch for tomorrow as well. Moving over to max pain, options, and put call ratio, right in that same range. Put wall is 480. Got pretty close to that, down to 483. Call wall 490. Top of the puts, up around 493. I don't think we're going to see that at this point. I think it makes a little bit more sense to finish pretty much right where we are, if not a little bit lower. 482 to 483 makes sense for the close on the Friday session based on these options. It's not a ton of options, only 1.1 million, but at this point it looks quite a bit more bearish than it did yesterday. Moving over to the markets, look at this sell-off, massive down day, 1.63% to the downside. I said it was coming. This is exactly what I expected to happen. We saw the weak earnings and the weak forward guide coming out with the mega caps. Talked about the FOMC potentially being the catalyst. And sure enough, that is what we're seeing here. Massive move down. On the FOMC, we threw a wick all the way up to 488. Then we moved all the way down to 482 quite quickly. So about a $6 move within that time frame. Pretty quick, about 1.5%. And you can see, look at that candle. Massive gap down, closed right on the low. Right at the level, so it did touch it and hold right at the 200 SMA on the hourly chart. If that breaks, which I expect it to, then we're looking at 479.30, and then you got major trend support sitting down at 478 or so. Look at the volume on that candle, massive volume to the downside. People getting out of these positions, momentum, bearish, everything looks like we are starting that deeper pullback. And you can see how that structure is breaking down. We did have a candle kind of like this on 20 December, and then we grinded a little bit higher here. But this is a different structure. We were at the peaks, gap down, fell, took out the 9 EMA, 21 sitting all the way at 478.80, which is just a little bit above that major trend support here on the hourly chart, but a little bit below it here on the daily chart. So everything looks bearish. Looks like we're starting to see that bigger pullback. And at this point, if it doesn't hold in that 478 area, 55 EMA sitting down at 467. Moving over to the NASDAQ. The NASDAQ looked even weaker going into today. You can see we had this kind of topping formation at this level. Couldn't get above it after hours on Monday. Couldn't get above it on Tuesday morning either. Fell throughout the session yesterday and then fell even more here today. Got down to 416.66. Touched that level and bounced a little bit. But at this point, again, all the EMAs and SMAs on the hourly chart have broken. Looks quite weak. Momentum bearish. RSI bearish. Look at that massive volume again on the day. Massive volume on those hourly candles as well. This looks very much like at least a short-term downtrend. Major support at the 21 EMA at 412.75. We'll see how that one plays out. At this point, you have to assume that this is going to be a little bit bigger continuation to the downside. We have seen moves kind of like this. You can see here from 28 December all the way down to 4 January. That was a move of about 4%. So if we do see a move like that, 4% lower would be into this range around that 409 area, which would give you about another $8 of downside potential. Certainly possible we see a move like that, but at this point I would expect it to roll over quite a bit stronger than this previous move. We're just extended. We didn't have the same strength. You can still see that divergence. We hit peak RSI going back to 19 December, and we had much higher prices, lower RSI reads, and now we're breaking down. Moving over to the Russell and the Dow. Even the Russell sold off a lot. Let's look at it on the daily. Down 2.44%. I kind of expected the Russell to hold up a little bit better just because it wasn't nearly as extended as everything else. You can see the Dow just massively higher over the past couple of days. So you would expect that one to pull back just like we saw in the NASDAQ and the SPY. But Russell giving it back here. Next level of support is in that 192 area. If that breaks, you got the 55 EMA at 190. So critical zone, much lower high setup. So you have that as well. Let's look at it on the hourly. Took out all the EMAs and SMAs on the hourly chart, so that's not great either. Again, big volume, big selling on the FOMC. Similarly on the Dow, 0.81% to the downside, fully engulfed previous candle. Still above the 9 EMA on the daily chart, so it's holding up a little bit better. You can see we're just barely below the 21 here on the 4-hour chart, so seeing a little bit of pullbacks. Support at 379.35, 55 EMA sitting at 378.41. Critical level in here, if that breaks, then I would expect a little bit more downside, potentially down to 373.74 and the bottom of this previous consolidation. Moving over to Apple and Tesla. Apple continues to fall. It's been in this downtrend. It's taken out all the EMAs and SMAs on the 4-hour chart. Back to the highly traded zone, which is interesting. So it's holding that right now here at 184.48. It's bouncing a little bit after hours. Did hit oversold conditions on the 4-hour chart. Also interesting. Let's look at it on the daily. Continues to fall aggressively. Hit that 144 EMA at 184.39. So holding that same level in that area. Still looks weak though in terms of structure. You have a high, lower high, big sell-off from that level, just like the previous one. And at this point, you would expect it to take out this midpoint and the 200 SMA, in my opinion. Just getting that first step into bearish momentum, you expect this to follow through. At least I would. So this looks quite weak on Apple. Tesla, on the other hand, it gave a lot of ground up on its earnings, so it seems to be holding in there a little bit better. Couldn't hold above 188.50. Let's look at it on the daily. Still down on the day, 2.24%. So still quite weak on the day, but it's holding within this same structure instead of breaking down below these lows. Support still down at 177.70 for me. Momentum ticking towards bullish a little bit. Kind of interesting there. Again, it gave up so much ground on the earnings that it's just not falling the same way we're seeing the other mega caps. Moving over to Microsoft and Alphabet, the earnings players for yesterday. We saw their fall continue here today. Microsoft was holding up pretty well, and then this morning they gave up a lot of ground, so ended up quite bearish on the day. Let's look at it here, 2.69%. That's a pretty big bearish day for Microsoft. It's been marching up just about every single day. Took out the trend, got support at 394.22. 21 EMA sitting at 389.45, as well as VWAP. Momentum rolling over, RSI breaking down, volume stepping up on that sell-off. Everything you would not want to see if you were bullish on this trade. So everything looks weak. And then Google, let's go ahead and look at it on the daily chart. Down 7.35%, massive sell-off, massive gap lower, continue lower, volume stepping up, momentum bearish. 55 EMA sitting at 140.16. Next support 138.21. Again, I don't think their earnings report was terrible. I just think that this was too extended and they could not maintain the hype. Moving over to Amazon and Meta, the players reporting earnings tomorrow. We already touched on Apple, but Amazon is falling. It's been falling. Let's look at it on the daily chart. It was down 1.4% yesterday, and then today 2.39%. So falling back into that more normal range, at least a little bit. Momentum rolling over. Volume hasn't really come through yet, probably waiting on earnings. 21 EMA sitting right at support at 153.54, which is right at these previous consolidation highs. So I would expect it to get to at least there, which is a little bit lower than current prices. That's about another 1% down. So something to watch for. I would expect it to get there even on their earnings. And then below that, you got 150.14, again, right at that 55 EMA. So EMA is sitting right on top of support. Makes sense. And then moving over to Meta, I'm honestly surprised how well this is holding up. It's quite interesting. It did fall a little bit yesterday, but today it held up quite well. Tested the 21 EMA and broke from there. So that's not a great setup. It is a pretty decent one if you're bearish. You can see still 2.48% to the downside. Momentum bearish. RSI bearish, breaking below that SMA. Support at 182. So quite a bit of downside. And then the 21 EMA sitting all the way down at 373. That's about 3.75% to that next support that I'd be watching. And then below that, you got the 55 EMA down at 350. So looks like we're just about done with this cycle. Question is, how is it going to look? Are we going to see a short-term bounce, a lower high setup, something like that? Or is it just going to follow through straight down? Something to watch going into earnings with this catalyst and the FOMC. I think it's going to be enough to push these lows at least back into those 55 EMAs tomorrow. Moving over to staples and discretionary. Staples threw a big wick all the way up to 73.79. Couldn't quite get to that 74 number, and then it sold off pretty strongly. So that's interesting. Back below the trend here, 21 EMA sitting down at 72.50, obviously the level we've been watching. Momentum rolling over, does not nearly look as good as it has over the past couple of weeks. Fully engulfed the previous candle, not great there either. We had a consolidation, tried to make a push, looks like we're breaking back into the range. That is not usually a great indicator of more upside to come. Still holding up better than everything else, only 0.74 to the downside. Look at that candle here on discretionaries. Just that one candle was down 1.17%. Let's look at it on the daily chart. 1.82%, right at key support 170.68. If that level breaks, you're watching 144 EMA down at 168.22, and then my level down here at 166.78. So interesting. looks very weak. We had a top, broke the range, consolidated. You could argue maybe this is a flag setup. Let's go ahead and see what that would look like. Something like that kind of makes sense. That would still give you support down around that 144 EMA, closer to that 168.50 area. Volume stepping higher on the sell-off, momentum bearish. Everything looks quite weak here still to me, and I would expect this to continue lower like I mentioned. Moving over to oil and gas, these gave back almost all their gains. Oil and gas down 2.6% today, energy down just about the same. You can see it took out my level, so glad I didn't jump in on that position. I was really looking for it to hold there and then potentially rally to 87.37. Couldn't do it. Broke back down to trend support. So key level here, if that trend support holds, that could be a trade. But at this point, it does look quite weak. Probably looking for that 21 EMA down at 82.68. Now, if that level holds, that would be a great setup. Right in that same zone, 9 EMA, 21 EMA. So watching for that. Otherwise, right now, you got to step down on momentum. RSI looking to break down at least to the SMA. So you got about another 5 or 6 points lower to go on RSI. So watching for this, short-term bearish, potentially looking for a bounce. Moving over to breadth, as I expected, it did crater here today. So we expected breadth to roll over. I thought we might hit the 55 EMA on a wick. Didn't happen on the 20-day average. Sold off, took out the level, took out 51.75. At this point, looking for at least 36.60 or a double bottom around 28.75, potentially even a lower low, something like this where you had a little bit of a bounce, rally up, lower low. That would put us down into that 16 range. So right now, looking for more sell-off over the next couple days. Similarly here on the 50-day average, pretty big sell-off on the day. I think that's the biggest bearish candle we've seen on this down move. Again, breaking down from the trend. It was testing it over the last 2 days, broke down. Next support 62.25, but realistically 52.81 or the 144 EMA and 200 SMA at 55.53. So right in that zone possible. I would expect to hit at least oversold conditions. Pretty close to that already, which is interesting, but this is not great. Got above it, broke back down below it, looking for oversold conditions. See what happens. You can see it can take a while for that to happen too. Last time we were here, sold off all the way down to that 30 range before we saw a decent bounce. And then we sold off all the way here to the lows, closer to that 6 to 7 range, rallied up, and then double tapped that before taking off in this most recent run. And now we're clearly breaking down from those levels, looking for this range. So definitely going to continue to watch this, looking for more downside. Moving over to yields. Yields are cratering, even with the news that Jerome Powell is saying he's not going to cut in March and probably not in May. So that's interesting. Yields falling a lot, 3% here on the 2-year yield, all the way down to 4.2, 10-year down to 3.9, so it's back below that 4% number, falling nearly 3% on the day. Momentum back into bearish, RSI definitely bearish. We talked about how it broke down here on Monday on the RSI, and it is continuing lower, probably going to hit oversold conditions at this point. In the 2-year yield, I would expect that to get down to that 4.07 level, which is my next support. Now let's go ahead and extend out this trend line. If we hit that, then we're going to be all the way down to 4% on the 2-year yield. That would be interesting. See how it plays out. Right now, yields are falling, even with the news that the Fed's still remaining a little bit more hawkish than markets had originally thought. Moving over to the dollar. Dollar rallied super aggressively throughout the session. You can see here, 9 o'clock candle. Touched that level, rallied right to the next one. So at this point, that is a dip low and a quick rejection right up to resistance. Still need to see it get above 103.65 and then hold and rally to the next one up at 104.4. Still got the 144 EMA sitting at 103.83. Momentum, not really showing much of anything. Slightly bearish if I had to say so. And then RSI here on the daily chart continues to hold above the SMA, which is slightly bullish. We're still holding above the 9 EMA on the daily chart as well, which is also slightly bullish. But realistically, this has been consolidation for a lot of days in a row, and I would expect it to break higher, which should send equities lower. Moving over to bonds, JNK selling off 0.27%, right back into that confluence. We talked about it yesterday. We'll see if that level holds at 94.82. That would be interesting. I would expect it to break at this point. Markets are headed lower in my opinion, so I would expect this to go lower. They tend to move together. And then we're seeing the inverse of that now on TLT. This is clearly a breakout at this point. We're back above all the EMAs and SMAs, got back above the trend here, back above 96.50. So pretty critical breaks to the upside. You can see we're up even more after hours. So at this point, you would expect to push back up to that 100 level. Volume on that, pretty bullish. seems like people see the writing on the wall that cuts are at least coming eventually, and we're starting to see more accumulation in this position. We've been seeing it for a while. You can see that spike up in volume, people buying longer term treasuries, but then we got another pretty big spike here today, 80 million volume on that move higher. So again, a little bit bullish here on TLT. Moving over to volatility, move index going a little bit higher, VIX definitely going higher. So it did end up holding that 21 EMA. You can see here, held it yesterday, gapped higher, held it today, volume bullish, momentum bullish, RSI bullish, holding at the SMA and bouncing. So all of the things we expected to happen yesterday ended up following through. The question is, how high do we go now? Like I said, 16.5 is kind of my initial price target right up to this trend line. Let's go ahead and extend that out a little bit. Makes sense to get into that range, 16.5, 16.75 potentially. And like I said, I expect more selling across markets, and this higher high trend seems to be holding up. Now we have a clear higher low, big move higher, took out that initial trend, looking for that next zone up around that 16 to 17 range. Moving over to my accounts, you can see I ended up actually a little bit higher than what I was at yesterday. Like I said in yesterday's video, market was falling after hours, so it started to take out some of those losses already from my totals, and then we ended up a little bit higher today based on that money coming out and the calls starting to come in. So those are definitely helping cut some of my losses on the day, and based on that, I think I was up about $200 on the day. So got the covered calls, 191, watching this one closely. If it breaks that level that I talked about, then I'll be selling those shares and maintaining the calls here on that position. Still plenty of profit left here. It's at $236 profit. Got about another $750 left on that call. See how it plays out there. And then looking at the Qs, I did end up rolling in here to 405. I ended up putting all 4 calls on the same strike at 405 for $21.50. And you can see I'm at $500 profit already on that position. The net credit on that position is 4 times 21. So it's a little bit over $8,000. But again, it's down at 405. So I'm pretty deep in the money still. I am expecting markets to fall. That should give me a little bit more protection. They did bounce a little bit after hours, which is interesting. I don't expect that to hold up. Probably just going to rally maybe into the pre-market and then sell off, kind of like we were doing on the previous dip low. But right now, plenty of protection. Gives me upside potential here. 405 plus 21 gives me around 426 for potential upside on that position, but gives me a little bit better protection at 405 and a little bit less time at only 44 days now. And then TQQQ, I did get stopped out of that share position. I picked up a put at 52 for 82 cents for that same expiration. If markets rally a little bit and I get back above 54, I'll go ahead and repurchase those shares and then collect the money on this put at 82 cents. So that'll give me a little bit of potential. If markets fall, then I avoided some losses, rebuying shares back down at 51.20 if you factor in that credit. So right now, neutral to bearish across the board, as I do expect more downside tomorrow. And then moving over to my Qs position, since I did adjust it, I'll let you know my new break even is down around 376. So it's actually a little bit higher, despite the fact that I was able to roll down for a credit. I took in some of that profit from the previous calls, so that kind of shifted my position a little bit. So 376 is my break even, but again, I'll be watching that 405 level. That's where the call strike is. If that level breaks, obviously I will be out of those shares long before that, really watching closer to that 410 area. If we fall another 2% from current levels, I'll still be okay. I'll still be above the call strike, but I'll continue to watch it in this zone. Let me know down in the comment section what you think of the FOMC and Jerome Powell's comments. Is it going to send markets lower? Were we just too optimistic? Where do we go from here? Definitely fun to watch. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.